Because the main argument that you're hearing right now in opposition to some of our economic plans, including our budget, is you've got all this money going out, you're creating huge deficits and debt, and that's irresponsible. Well, first of all, most of these critics presided over a doubling of the national debt. We are inheriting a $1.3 trillion deficit. So, they don't have the standing to make this criticism, I think, given how irresponsible they are. That's point number one. Having said that, even somebody who caused the problem isn't wrong when they say it is a problem that we've got this big debt and these big deficits. So what we've tried to do is to say, let's right now just focus on getting the economy back on track, reducing unemployment, creating jobs, making sure our school systems still have teachers, cops are still on the streets, firefighters are still in the station house. Let's do what we need to do to get through this difficult time. Let's make some investments in healthcare, energy, education that will lay the foundation for long-term economic growth. But let's also start making some tough choices about the deficit as soon as we get out of this recovery. So, for example, we can't keep on providing the insurance companies huge subsidies under Medicare for a program called Medicare Advantage that doesn't make our seniors any healthier than the regular Medicare plan. We need to go ahead and use that money for other things. We can't keep on giving these huge procurement contracts to defense industries that end up being 50, 60, 100% over budget. Very good for contractors, not so good for taxpayers. So we've got to institute reforms, and we've already identified potentially pulling $40 billion out annually in savings on procurement. You know, those are the kinds of things, those are the kinds of steps that we need to take, and we are going to go through this budget line by line, and some of these choices may be different. I won't lie to you, we can't keep on just printing money and saying we'll let our children worry about it. But we have to do it in a way that right now focuses on just getting people back on their feet, getting the economy running again, and then we're going to have to make some difficult choices, especially over some of these longer-term entitlements like Social Security and Medicare. All right. This young lady right here. Hold on a second. We've got a mic right here, right in front. Yep.
Hello.
Hello.
My name is Joan Earhart, and I'm a community bank SBA lender, and I'm proud we've been one for 20 years. We're very, very excited about the stimulus package, and we're going to do everything we can to get the money out there, including financing the construction projects that you're talking about. However, as a lender and as a bank, we have a problem that I feel needs to be addressed. When we make loans that are less than the normal quality, even with the SBA guarantee, the regulators tend to criticize us. And when they criticize us, they make us set aside reserves as if the loan is going to be bad, and that eats into our capital. That's part of the problem that banks are having right now, why they need the TARP money. Not all banks are bad banks, as you know, and as a community bank that's been around for 85 years, we haven't even taken TARP money. We want to make SBA loans, but we don't want to get our hands slapped by the regulators when we try to help these people. And last year is going to be a less than stellar tax return for everybody that's had a problem that is going to come to the SBA for help. Will you be able to speak with the regulators and set some kind of new bar so that we won't be criticized and we can actually go out and loan this money that we want to?
Well, you make a terrific point. This is an excellent point. Let me say a couple of things on this. First of all, just so everybody caught the issue here, there are a lot of community banks, smaller banks, local banks that did not act irresponsibly. They weren't involved in buying some of these weird financial instruments that didn't work. They're not paying out $100 million bonuses. You don't look like you got a $5 million bonus. You wish, right? You know, they're working with local businesses, small contractors. They take in deposits. They do what banks are supposed to do. They're still having some problems, local community banks, and they're having problems in two areas. Number one is a lot of these community banks give small business administration loans, SBA loans, that are guaranteed by the federal government. But the problem is that historically what they've done is they get the loans and then they sell them on what's called the secondary market. They sell them to other parties who invest in these loans. The problem is all these secondary markets have all frozen up right now because everybody's so nervous about all these losses that have been happening on Wall Street. So we just announced this week a program that will allow the Treasury Department to buy these loans directly from the community bank. So if you've got $5 million worth of loans, SBA loans already on the books, you can sell them to Treasury. That will then mean that you'll have $5 million that you can now put back to work providing loans without worrying about your capital. So you should find out. This is on our website, the White House website, and we'll tell you about this program. Now, you're right, though, we still have a problem that a lot of small businesses are seeing their credit lines restricted. And part of that has to do with the issue you're talking about, which is regulators may be saying to banks, look, we're worried about all these losses, so pull back on what you consider riskier loans. Well, if you've got a credit line to a small business and they're seeing some of their business dry out right now, then you might be saying to yourself, maybe I can't continue that credit line. We don't have direct authority, the White House does not have direct authority over these regulators. These regulators are supposed to be somewhat independent from politics. But we have had conversations to note that during a difficult period like this, we want to make sure that the bottom line is ultimately that liquidity and lending is going out the door, and I think that we're going to be having broader conversations with the community banks to figure out how can we take even further steps to help them be in a position to help small businesses and individuals who depend so much on banks like yours. Okay? All right.